Welcome to the Long and Short. Maestro here. Thanks for tuning in. Every day on this channel, we try to make you a better crypto trader by showing you smart money, price action trading techniques from a long and a short-term perspective. Doesn't matter if you're a short-term trader or a long-term trader, we do have some tricks up our sleeve to show you today. All right, so let's start off with video number 2, building a watch list. This is exactly where you want to start if you are a brand new trader. And even if you've been in the market for a while, if you don't have a watch list, you're doing yourself a bit of disservice. All right, so we're going to talk about what a watch list is, how it's important, why you can use this to your advantage, right? And how you can essentially just sort of build your portfolio from this starting point. All right, so let's get started. What's the purpose of a watch list? Why build a watch list? You want to consistently track potential opportunities in the market and your current positions in the market. You don't want to just invest and have some things sitting on Coinbase and not look at what the price action is doing. So the reason why we actually build our watch list in TradingView is so that we can see the price action according to what we want to get in and get out on. So there's a lot of different reasons, but that's just one of them. It's really just to monitor what's going on. You want to stay focused on the goals that you define. If you have levels to take profit, levels to enter, the only way you'll really be able to watch them is through a watch list on something like TradingView. It gives you a bit of more organization around your sense of thought. Where you're getting in, where you're getting out, how your positions are doing, if they're crashing, if they're rising, how your positions are doing in relation to the rest of the crypto market. A lot of this stuff matters when it comes down to you seeing whether or not your investment ideas are successful or not. You have to separate things, right? So organizing them in this way helps you get that perspective. Also, when we build our watch list, we build it on TradingView, as we mentioned a few times already, right? This is our hub for all long-term and mid-term trade ideas. We're going to set them up on TradingView. We're going to write notes about them on TradingView. And then once they reach these levels on the exchanges that we're trading on, we're going to take action. So what does it take to build that watch list? Before you start, there's some things that you do need to research. If you're brand new to crypto, you do want to learn certain things before you start to just invest in things, right? I would never tell anyone to invest in something that they don't have knowledge about. That's probably the worst idea that you can ever think about doing. Okay, you want to know about your space. So study the history of blockchain and cryptocurrency, the types of cryptocurrencies, right? It's not just Ethereum and Bitcoin. There's tons of different utilities for these coins nowadays. It's important for you to know the differences between them. You want to get to know the space. You want to get to know the terminology, the things that people say when it comes to FUD FOMO. What does that mean? If you're not aware, right, just study up, get your mind wrapped around some of the language that's spoken in these spaces. And exchanges. What coins do they offer? You want to research this because, say, for example, you find a coin and it's not offered on Coinbase. Where else can you go to find this particular coin, right? So do some research on your exchanges as well and the stipulations around these exchanges and what you're going to need to give these exchanges as you sign up. And then ultimately, you want to pick some coins. Now, there are 2 coins that I will say are the only blue chips in crypto at the moment. This is Bitcoin and Ethereum. So these are 2 coins that I would say and recommend to be in anyone's portfolio, no matter if you're invested in any other coins. If you just invested in Bitcoin and Ethereum, I would not be upset with you. But these are the blue chip, sort of blue chip stocks, if you will, that you should have in your portfolio, even if it's a small amount. Now, also, you want to find crypto projects that are trying to solve problems in industries that you are interested in. What do we mean by this? Well, you may see that there's some problem in an industry that you're very interested in, right? Now, it could be video games, it can be art, it can be a number of different interests that people have. But it should be something that you know about a little bit, right? And understand the problems of that particular industry. Look for cryptos that are trying to solve those particular problems and see if they have a nice, strong team behind them to actually solve that problem. If you find something like that, that's really a good project for you to invest in, because not only do you know the industry, but you have a good idea that the team may bring something to bear when it comes to actual progress in a project and bringing a crypto from sort of point A to point B. And these are the things that you want to pay attention to. Crypto itself as a space is very large, it's very intense, and it's very confusing to those people who first start. So a good way to give yourself a leg up in this and not get lost in the sauce is to try to invest in cryptos that fall somewhere within your industry that you know about or have some kind of interest in, right? That's going to help you a long way as you start to move forward. Starting with coin research, large cap research versus small mid cap research, okay? Now, your large cap research is going to be done for you for the most part through most media outlets. You can go to YouTube, type in Bitcoin. There's 70 million videos, literally, like that you can go through to learn about Bitcoin, learn about cryptocurrency, learn about blockchain. You can sit there and get a full day of this information. So things like Bitcoin, things like Ethereum, you're going to hear about them on a regular, continuous basis because these are the larger cap coins, the number 1, 2, 3, 4 coins. You're going to hear a lot of news about them. So your research is going to be done for you when it comes to these coins. But when it comes to mid to low cap coins, you're going to have to do your own research. Now, there's some resources that you can go to. Here's a number of them. You can go to CoinGecko, CoinMarketCap, Masari, ICO Drops, CoinMarketCal, crypto news, research websites, things of that nature, and then contract audit websites are new ones that I'm starting to research a bit as well. If you're going to get into any of these coins, right, you want to get a better idea, especially if it's a mid to low cap coin, on who the team is, whether or not their contracts has a, literally a rug pull set up in them. There's some things that you want to dive a bit deeper into. So all of these different sites we're going to give deeper dive in tutorials into, right? But these are the places that you start in regards to resources. CoinGecko, you can do a lot of research there. You can go into the Ether scans and the BSC scans to really see who the holders are for particular cryptos. And if there's small allocations of a lot of crypto into one wallet or another, right, then these are sort of warning signs. There's a lot of different ways for you to research deeper into projects to get an idea of what's really going on behind the scenes and whether or not this is a good investment for you. These are the websites that I've sort of used in my journey to try to capture some coins of value. They all will give you different types of information, right? So CoinGecko and CoinMarketCap, you get your top 100, top 1,000 coins, but you can also dive a bit deeper into researching who the holders are, get news on these things, etc. Right? Masari is a deeper level research type of website, right? ICO Drops focuses on the brand new cryptos coming to market. CoinMarketCal focuses on some of these schedules, right? So if you want to see if a project's keeping up with its roadmap, CoinMarketCal is a way to sort of map out things that are happening with specific projects and whether or not they're meeting their goals and their dates. Of course, you want to keep your eye on the crypto news. Some of this research, you're going to need to go to the actual websites of these coins to get information. And then, of course, your contract audit websites. You want to make sure that the smart contracts, if there are some, are not setting people up for a rug pull and not allocating everything to one specific wallet, because these are the easy ways for you to get involved in something that's going to wreck you at the end of the day. Another thing to watch is the project roadmap, as we mentioned before, and upcoming events. You want to make sure that these projects are hitting their marks when it comes to their roadmaps. Number of whale holders and coin allocations. This is another thing that we think you should definitely pay attention to, right? And we mentioned that you can get a lot of this information from the Ether scans, from the BSC scans, and just taking a look at who holds the majority of the coins is going to give you a lot of power when it comes to making decisions. You also want to dive deeper into the social media for this particular coin, the community of the coin. And there's some thoughts that we have around social media and the coin community, right, itself, that we think you should be aware of, that we're going to talk about in later videos. But also, you want to make sure that the project team are real people, right? Go to their social profiles, see if they're real people, if they're really interacting, if they're really doing things in real life. If it seems like a robot, or if these people are anonymous, then it's probably not a good idea to go ahead and jump into these things. Also, you want to track these projects closely for updates. Follow them on Twitter. Make sure that you're aware of what's going on in these communities, because just like that, you can, turn a good situation into a bad situation if you're not paying attention. Make sure you're doing that. So here's some considerations when it comes to your watch list. There is such a thing as risk and reward, especially when it comes to investing. When it comes to your watch list, you want to build your risk versus your reward based on your market cap. All right, so your lower market cap is going to have a greater risk and reward. So with that being said, you should not have a ton of lower market cap coins in your portfolio. The majority of it should be higher cap coins because you have a lower risk. And even though you're going to get a bit of a lower reward, you're still seeing major swings in crypto that you're not seeing in other asset classes. So the reward, right, it's still pretty good if you ask me. And you're just going to lower your risk by investing in things that have higher market caps. But with that being said, there is something or a piece of terminology that traders like to call cutting zeros. You're looking for very low to mid cap coins with a few zeros before the dollar amount. Essentially, these are less than a penny, all right? Less than a penny cryptos with low market caps, and the more zeros that you have before it reaches 1 cent, the better, essentially, right? Because every time you essentially cut a zero out of that price, you're 100xing your position. Now, this is very possible in bull markets. We're going to talk about this a little bit, but this is the concept basically, right? You want to look for these type of coins, and these are your really risky plays. The more zeros and the lower the market cap, the greater the moonshot. So these are similar to lottery tickets. If you're looking for these type of things on CoinMarketCap, CoinGecko, these are the areas of, really big opportunity that is the riskiest play in crypto, if you ask us, right? So they're not always risky though. In bullish and volatile markets, these opportunities can yield you 100x or more, 1000x. These are the coins that literally don't have enough market cap to push them up to the levels that they should be at, right? Because if they do have value, then they're eventually going to get up to higher numbers in price. But if nothing's really moving on these are also, sort of the worst coins to be in because they're only controlled by a smaller amount of people in the market, and it can swing dramatically. In sideways markets and in uncertain markets, these are not viable plays to us. Only in bullish type of markets. And really, it's only when Bitcoin is bullish and sort of pulling back and altcoin season starts a bit. This is the only time that it's really viable for us to look at these type of plays. Right? And also in bearish and volatile markets, these are the first coins to go to zero. Why? Because they have the smallest amount of market cap. But if you want to take a shot, right? If you really want to take a shot, the best shot to take is to try to cut some zeros in the market. So what is the work that we need to do to create our watch list? This is what we basically need to do. We want to build a threshold criteria that a coin or a project needs to meet before we consider them something to add to our watch list. All right, now the easiest way to do this is to create something called the altcoin scoring rubric. Well, you don't have to call it that, but that's what I call it. And it's just basically an Excel spreadsheet that gives me information that I need to know in order to make a proper decision about an altcoin. There's a lot of different things that you're going to have to research. And in order for you to put it all into one place, right, and then score it, this is the best way that you're going to start to find consistent ways to research projects, consistent ways to get an idea of which projects are good or bad, and then have an idea of what you actually want to put some money behind and invest in based on your own scoring rubric, right? So I know you guys saw that spreadsheet. That's an entire tutorial in itself, but just understand that you want to create something like this so that you have an idea of things that look good to you versus things that aren't necessarily a good play, right? Just based on your own criteria. You want to build a portfolio watch list on TradingView for the altcoins that make the grade. So if your altcoin scores high on your rubric, say, yes, this is something that I want to get into. I'm going to put it on my watch list in TradingView. And I suggest that you start small and expand as your knowledge grows. You don't have to put everything on there in one day, right? Start small with 1 or 2 coins. As you learn how to research, now you can start to add a lot more onto that watch list. And eventually you want to make this a pretty substantial, pretty large watch list. The more that you're able to see in the market, the better, but you don't want to watch everything. So most coins that you'll want to watch and track at any time is about 20. If you're able to track more, then by all means do more. But the most that I do is maybe around 20, 25, 30 coins, right? And with that, I'm able to keep a pretty straight focus on some things that are large cap, mid cap to low cap, and take advantage of things when they happen. So there are some common mistakes that lots of people make when they first get into trading, and we think it's important for us to really dive into this before we get into our next point. If it seems like someone is selling something to you when they talk about a coin, think twice about it, okay? Now, there are some common words that these people will use. Things like utility, community, meme, influencer / celebrity. If they use those words in the same sentence, run. It's a rug pull, all right? And this is just based off of experience. This is all based off of just watching things in the market and seeing how they turn out, okay? Over the course of time, this is what I've noticed. Also, if it seems too good to be true, it is too good to be true. Even in crypto, this is the fact, all right? Solid crypto projects do not need influencer promotion or marketing campaigns to entice investors. Just ask yourself, does this crypto solve a problem? That's probably the easiest way for you to get a better idea or understanding on whether or not this is something that you would invest in. Is it solving a current problem in the world, and how well is it solving it? All right, just like anything else, if a crypto meets those standards, chances are it's a pretty good investment. All right. The next thing I want to talk about is crypto communities. As you begin to research coins, you may come across some communities that intrigue you, right? You may go on to Twitter and see some communities. And this is stuff that happens with a lot of NFT projects, right? The community kind of just builds people up and says, yes, this is the best community that you could ever be a part of. We're going to do so many different things. They promise, and then they rug pull, all right? So being part of a crypto community is sort of a double-edged sword. You're able to get the best information, but you sort of become trapped and entrapped in that community. There are communities here in crypto space where if you sell anything, you're looked at as sort of they have to out you out of the community. Why? We're all traders, right? And the goal is to trade these things, not necessarily hold on to them forever, but you have people in these communities that will help you create your bias that isn't necessarily the best bias for you to carry into trading. So you don't want to become a victim of community bias and the herd mentality. Why is this? The herd is the easiest group to lead to slaughter. If everyone's thinking the same way, it's very easy to manipulate and draw these people in a direction and completely chop everything off, right? That's how rug pulls happen. This is the easiest way to overinvest in something and lose a substantial amount of your capital by following the herd. Some of the largest rug pulls happen in the most friendly and active communities. Think about all of these NFT rug pulls that are happening, and I hate to bring it up, but it's happening, guys. And if it's happening, it's a reality. And if it's a reality, then it's something that we have to talk about, right? We can't hide away from these things. So just be aware of the community that you're talking with. Be aware of who the people that are running and moderating that community are. And they should be front facing. None of this should be sort of in the background hiding. And I think crypto, being that Satoshi Nakamoto is, sort of not a real person that anyone can put a finger on. Everyone thinks that they should run their crypto projects that way. I think it's a new age, guys. You have to be accountable and responsible, and you have to be front customer facing if you want your project to really have any validity in the eyes of real people. You want to review the community chats for issues, right? If there's a lot of issues, and robotic like messages, right? So if things seem to be sort of auto answered, right? And you're seeing the same response from moderators from a lot of different questions that people are asking, or if people don't seem happy, may not be the place for you, right? And think of a community chat for any crypto, any Discord as customer service. That's a customer service line, if you ask me. Is the team providing good service? If they're not providing good service, it's a very simple way for you to say to yourself, if these people can't even answer text message questions, what happens when they get sick of doing all of this, okay? They're gone. And that's why the rug pulls happen. You can try to get ahead of the game if in fact you are part of a crypto community and you see these type of things happening in that community. So there are some best practices. We are going to use color codes and sections to create our watch list. And why do we do this, right? We just want to know what we're looking at very quickly whenever we go to the charts. The hardest part about making decisions is over analyzing things. I want to be able to go right into my chart, look at what I have, look at what I'm doing, look at everything based on color codes and make decisions right away. It's not about, analyzing things for 3 hours and then coming out with a hypothesis. No, good traders are able to come to the market, know what they're looking at, know what they're waiting for, and then execute. All right. And some of the easiest ways to do it is just by color coding what you're looking at. All right, so we're going to create a system for high, mid, low cap coins on this watch list. We're going to do it by color. We're going to create sections, right? The coins that we're watching and the coins that we're currently invested in. You want to know the difference between the two so that you understand what you're playing with in your portfolio, the levels that you should be watching, the actions that you should be taking, right? And we're going to track this. tracking this list consistently, daily, weekly, depending on what type of trader you are, right? You could be a positional trader, swing trader, scalper. You want to track this list on a pretty consistent basis because these are where a lot of the setups are going to be. You want to look for entry and exit opportunities always when it comes to your watch list, all right? So let's go ahead into some watch list examples. We're actually going to build a watch list from scratch, right? We're going to take a look at a couple of things on how we would mark our watch list up, and we'll find some coins and we'll dive into it, and by the end of this little short segment we'll have a watch list. All right, let's go. Okay, folks, so here we're going to go ahead and build a watch list, and to build a watch list is very simple. This is the one that I've previously built that most people see in our videos, but we're going to start brand new and fresh. All right, so we're going to create a new list, and whenever you build a watch list, you want to name it. So we'll just call this one tutorial watch list. All right, and this is just basically for tutorial purposes, so we'll go ahead and build it. Now you'll notice that there's nothing here, okay? And we're still on the Bitcoin US dollar Coinbase chart. So since we know that Bitcoin is going to be one of our main coins that we're going to buy into, it's a blue chip, right? Bitcoin and Ethereum, we can simply easily add this to the watch list. There's a couple of different ways that we can do it. If I right click just sort of into the dark space here, I can put add BTC to watch list, and then they'll ask me which one I want to add it to. Or I can come up here, click add symbol, type in the symbol, and add it to the watch list as well. All right. So if you have a number of different coins that you want to add all at the same time, that plus button up here is the easiest way to go. But if you're actually on the asset itself already on the chart, just right click and add this to the watch list, tutorial watch list. Now, as we put it up there, you'll see that it did populate right in the top corner there. All right. So let's go to Ethereum now. The easiest way to move from asset to asset or crypto to crypto in TradingView is just to type it in. Okay. So I'm going to type in ETH. All right. Now I'm in the crypto section to look for different particular brokers that have Ethereum. All right. Now I'm buying Ethereum for the long term. Okay. It's a blue chip, so we're going to buy it from Coinbase. All right. This is the exchange that we're going to buy Ethereum from. So we choose that particular one. Now, again, same way, we're going to go ahead and click add Ethereum to watch list, the tutorial watch list, and now it pops up under Bitcoin. All right. So these are my two blue chips that I'm starting my watch list with. Okay. But once I start to add more coins, these may actually get lost in the sauce. So the way that I want to identify them, okay, is through actual tags. So being that these are blue chips, I'll label them blue. And what I'll do next is section these two off. I'm going to right click, all right, and I'm going to add a section, and that section is going to be called blue chips. What we want to do next is start to line up some mid caps, but we want to create a brand new section for them. So we're going to right click into this area here, and we're going to click add a section, all right, and we're going to kind of drag that below, and we're going to name this mid caps. All right, now our mid caps, they're going to fall into a special category. Remember, we're on CoinGecko right now, okay? So we want to look for things that are under $500 million in terms of market cap. All right, so let's say, for example, we come to the second page, we start to do some research, and we see UMA, we see Kava, we see a number of different coins that we've done our research on and that we actually want to take advantage of in the mid-cap area. All right, so let's say, for example, UMA is one of them. We'll go back to TradingView. We'll just go ahead and type it in, UMA, okay, into the blank space. We know that we can find this on Coinbase, which is our preferred exchange. All right, so we'll pull that up. We'll right click. We'll add UMA to the watch list under tutorial watch list. Automatically shows up under mid caps. Mid caps again, right? These typically won't be labeled right off the bat, but we did do something with UMA earlier, so it was labeled. Mid caps, they're going to have a different designation as blue caps, right? So different target, different section. And we can add as many of these as we want based on our research, right? Let's say, for example, we wanted to add Kava, okay? We'll come back to TradingView, type it in, K-A-V-A, all right? And we'll find an exchange that is currently trading on, all right? And what we're looking is for something like a USD pair or US dollar. I'll see if we can get this at Kraken, all right? So we know that we have to now use the Kraken exchange if, in fact, we're going to be buying Kava, All right, but it really depends. Whatever exchange you like to buy into, it's up to you. All right, but again, the process is the same. We're going to add this to the watch list, and we're going to give it a designation here and tag it. These are mid-cap coins, and eventually you'll get around to smaller cap coins. All right, so what is the area for small cap coins? We got to go way down here, right? And let's go to maybe page 4. All right, and smaller caps, we're talking about less than 100 million, right? So we got to keep scrolling. We got to keep going, got to keep going, got to keep going. Now we're getting somewhere. Okay, so now we're under the $100 million mark. These are small caps. Okay, these are, essentially coins that haven't really made it yet in the crypto space, but they have some possible room for growth. All right, so let's say, for example, we see Venus, XVS. We'll come back to our chart. We'll type it in, XVS. All right. Now, the smaller the cap, usually the less number of exchanges you'll find it on. So sometimes you may find this very hard to get on an exchange that actually offers these types of coins, right? But we lucked up. We're on Binance. Okay, let's do Binance USD versus XVS. All right, and we'll go ahead and again, we'll go ahead and add this to the tutorial watch list. And again, this is a small cap, so we're going to label this. I like to label the small caps pink. All right. And then from there, we just need to create that section again. And we're going to label this small caps. All right. So hopefully you guys are starting to see what we're getting here. All right. We have a watch list full of different cryptos, and eventually you'll have tons more of these, right? And your sections will really start to fill up. But what we did was we sectioned them off. We have all of the blue chip things that we're watching. We have all of the mid caps that we're watching, all of the small caps that we're watching, right? So we understand just based on market cap where these things are moving. And, you'll start to notice how small caps move in relation to mid caps and how they move in relation to large caps, right? And vice versa. All right, but there's one more piece that we need to add to this, and that is actually what's in our portfolio. So we want to add one more section. We want to name this portfolio. All right, and portfolio simply denotes what we're invested in. Okay, so from our blue chips watch list, we're going to drag Bitcoin down here. Okay, we're going to drag Ethereum down here. These are things that are already in our portfolio. Okay, and we can drag the portfolio section up, just to kind of put it at the top to make sure that we're, always able to track what's happening with our portfolio. But now we're just able to add in more blue chips into the watch list to see whether or not we actually want to put them into our portfolio because we bought them. Okay, guys? So this is the simplest way to do it if you ask me. You want to create sections, right? For portfolio, blue chips that you're watching, mid caps that you're watching, small caps that you're watching. And as you get in and out of positions, okay, all you're going to really need to do is move them up, move them down, according to whether or not they are actually active in your portfolio. That's how we build a watch list. This is how we get prepared to get ourselves into trades, actually get prepared to get ourselves into a space where we can build a portfolio. And this is really just the first step that we're going to need to do in order to understand where we want to get into the market, where we are when we're in the market, and possible opportunities that may be coming down the line in some of these lower cap coins. All right, back to the lesson. All right, so when it comes down to watch list allocation, there are some things that I think we should address here. Now, everyone's going to have a different number when it comes to what they think you should allocate for your watch list. Our numbers are here. Okay, so we think about 70% for blue chips, 20% for mid caps, 7% for low caps, 3% for no caps. And what we mean by no caps, we're going to explain that in a second. All right. So blue chips, these are the safest investments in crypto, as we've stated before, right? Now, the way that we view it is the market cap is somewhere between 500 million, $1 billion or more. Okay. These are the top coins in the market. These are the coins that will take the longest to die in the market, which is why we say if we're going into a bear market, if you have 70% of what you have in blue chips, you're not going to be affected as bad in a bear market than if you were to invest most of it in mid caps or most of it in low caps, right? Those are the coins that are going to die the quickest. Your blue chips, they'll bleed out a lot slower if in fact they do bleed out, okay? So second to those are the mid caps, larger potential for growth than large caps, and safer than low caps, but still risky, right? Your market cap's anywhere between 100 million and 500 million, and these coins start to show up somewhere around 125 on CoinGecko, right? So if you go to CoinGecko and you look at the rankings for market cap, these coins start to show up around number 125, okay? Now, these are pretty good coins to invest in. I would fluctuate between, 70 to 65 to, maybe 75% for blue chips, and then make the difference up with mid caps, right? I'm not going to move the low cap and no caps too much, but mid caps, I can definitely make up a lot of room with that, right? Because these, again, are still high in market cap, and in regards to where they sit in terms of where crypto projects are, they're pretty high on the list, right? Not the top 100 maybe, but they're still pretty high on that list. Next, you have your low caps, right? These are long shots. I like to call them lottery tickets, all right? Now, the market cap for these are somewhere around 100 million to 10 million, all right? Now, if you get down into the $10 million area for market cap, you're really starting to play with fire at that area. Now, some of these coins are going to start to show up around number 400 on CoinGecko, and these are really long shots, folks. You shouldn't put a large substantial amount of any investments into these type of coins just simply because they're too low in market cap, right? They haven't really proved themselves in the crypto market yet, and they could definitely crash to zero, okay? Now, these are what I like to call no caps. These are the super long shots. Lottery tickets times 2. Market cap is below 10 million or they're currently funding. They don't even have a space on CoinGecko, or if they do, they're showing up after thousands of other coins. ICO drops is a good way for you to find some of these pre-market coins. And believe it or not, if you catch a really good no cap to low cap coin, these are the things that you can turn $100 into $100,000, within a year. But you have to be smart about what you're doing. You have to understand exactly the problem that crypto is trying to solve, the team behind it, the research behind it. You have to understand things on a lot of different levels before you're able to catch these type of moves in the market. This is where the greatest areas of opportunity lie, but also the greatest areas of risk. All right. So just understanding these sort of 4 levels of how you should break down your portfolio will give you opportunities sort of in all of these areas. And you won't be affected so much if one of these areas, or a couple of these areas really go down. You'll still have some dry powder left if you're able to follow the system that we're showing you guys here and how to allocate your watch list and build this up into your portfolio. All right. So what are some of the key takeaways here? Right? Your watch list is going to help you track the market, track your current positions, define your focus through organization of what you're doing, right? You got to see what you're doing before you can actually do it. Watch lists, they should be research oriented. You're not just going to put a bunch of coins on your watch list. You want to become familiar with how to research cryptocurrencies, right? So starting off, this is sort of the starting point that you're going to need to get good at if you're going to find some of those gems and some of those no caps that you're going to want to put onto your watch list, right? The research is very important. Also, your watch list should be diversified between large, mid, small cap coins and some no cap coins if you can find them. And last but not least, you want to start small and expand as you learn more, okay? And also, this is an iterative process. You're not just going to build your watch list and let it go stale. This is something that you're going to be tracking daily, so you should update it daily as well. If you get into a position, then things should change, right, in your categories. If you get out of a position, then things should change in your categories, right? It's a very simple process, but hard to maintain once you get going with it, right? But the better you're able to maintain it, the better you're going to be able to make decisions and track things in the market so that you're successful as a trader, okay? So hopefully this information has been valuable to you. If you do have any questions, please leave them in the comments for us. We will answer them. Please like, subscribe, share, click the bell notification, all of those good things that we ask you to do on YouTube so that you're aware when we do drop the next video of this tutorial, okay? Check out all of our socials to the right of the screen there. Thank you guys for tuning in to how we're going to build up our watch list. The next video is going to be about marking our targets on that watch list, okay, guys? So thanks again for tuning in. It's your boy Maestro. It's the long and short. Take care. We'll speak to y'all soon.